Hi everyone and welcome back. Today we will have a quick review to the assets from last week. And in last week's update we have talked about the UTI Patterson stock, Hims and Hers, Energy Fuels, Uranium Energy, CrowdStrike and SanDisk. And what else we had? Quantum computing. And in the end we will have a look on Bitcoin and Solana. But before we jump in, it would be really great if you could like and subscribe to this channel, because that would help me to grow this channel and I can keep you updated. So it would be really nice if you like and subscribe here. So yeah, many thanks in advance and let's jump in. So I've already opened it here, the UTI Patterson chart, and we have talked about the potential three-wave structure here in the wave 1, and that keeps the door open that we see here or saw a potential C wave to the upside in this larger B wave. So I will label it here for you again. So three-wave structure in wave 1 or A. And if this was a B wave, then we could have found a top here in the larger C wave of the B wave, and the C waves are always in 5 waves, as you can see here, 1, 2, 3, 4, 5. And therefore we could have found a top here in the larger B wave. And I also told you we have to observe this structure here. And everybody who's in my community know that I bought in here and a huge position right here down below at the $5.80. And therefore we were nicely in profits and took already some profits. I think I told you that right at the top here at $11.57 was that. And therefore I told you we have to observe the structure here. If we see a 5-wave structure to the downside, or 1, 2, 3, 4, 5, something like that, then we have the first evidence that this one here was the first wave 1. And then if we see a corrective move to the upside, we have a potential 1-2 setup of the larger C wave to the downside to this B wave here. But if the price is corrective or the chart is corrective from this top on, we can expect higher prices in a larger wave 5. And now we got more data, and in the last update I have labeled the move when we zoom in here. I think it was this move. You can check that in the last update. A, B, C here. I have labeled that as an A wave. And then we had a potential B wave here or a wave 1. So the bottom could be in here last week. And then we were looking here for a wave 2 or the C wave down. And now the price did something, more corrective, let's say it like that. So I see this structure here as a more complex structure, but as it's overlapping, as you can see here, highs and lows are overlapping. It's definitely not an impulse to the downside. And that means the probabilities for a C wave of this B wave are less likely. Therefore, I'm definitely looking for trend continuation to the upside. As long as the yellow supports holds. I know there's a long way to go. But as you can see here, this is a 3-wave structure in a potential A wave. And then we were expecting, the 1, 2, 3, 4, 5 to the upside or the B wave. And now the price made a 3-wave structure again. Therefore, I'm labeling this one here now down below here in an ABC in a W, X, Y, and in a WXY, the substructures are always in 3 waves. And that means we have here potentially again a 3-wave structure in a larger A wave, or we have already bottomed here in the Y wave. As long we are staying below the X wave high here, I'm looking here for the A wave, B wave, C wave in the Y wave to the downside. If we're breaking above this level, we potentially saw, either a low or the bottom in the wave 4, or this one was just an A wave and now we're running into this red resistance zone, get rejected, and see here the B wave, and that would mean we come deeper again. But as I told you, as long we hold above the yellow support box here, I see a trend continuation to the upside. It's possible that we turn around from here, definitely, but for that I want to see more data. It's possible that we see currently here something like that. 1, 2, 3, 4, 5. But we are potentially in a diagonal pattern, and therefore this could be easily an A wave. And then we see a deep pullback in a B. And afterwards, 1, 2, 3, 4, 5 in the C wave of the fifth wave here to the upside. My target here, if we see the trend continuation here, and that's my preferred scenario, for the fifth wave, I would look next here at the $13 level, and then we have the $14. So around this level here, I'm looking for some kind of a reaction. At least if we break above, then we have the larger Fibonacci resistance here at $15. So I mean, for everyone who entered with us here down below, we already took some profits out here, and I think it would make sense if you didn't take any profits. I mean, it's not a financial advice, but this area between the $13 and $15, if we get there, could be a good exit zone. I mean, or at least taking partial profits, because we have already made, we are in a uptrend since, what is it? So keep it here, November 2025. So it's almost a half year now. And when we see here the indicators, let's check the 1 week. Yeah, we come here from an overbought region. And if we get now another high, we probably make some bearish divergences. And yeah, the price is signaling us that we are close to a top. I'm looking here for one more high. If we break, it would be the signal would be definitely here breaking above the $11.77. If we break above that level, the next level to watch is definitely the $13 level, and above that level, it's possible that we reach the $15 level, and therefore we are pretty close to a top. Taking partial profits would make sense currently. So I will try to make it short and efficient for you. Therefore, I will jump to the next one, and I have my list here, and that's hims and hers. Yeah, last week I told you hims and hers made a really important move, and I have already analyzed it here from my community. So if you want to join my community, check out the WAP link down below. You get 90 days for free with the code FREE90. And yeah, last week we had the signal here. I think it was at around $24 or $23. Anyway, we had the potential 1, 2, 3, 4, 5 pattern to the downside. That got invalidated. That was really important that we broke through this level. And because that makes one more low less likely, and therefore our view shifted to the blue count here. And now I will put that onto the chart again. That was now the signal line at the 61. Yeah, so 50% out. Yeah, at $27. I think we were right below that level last week. And I told you this is a really important level, because here on the larger time frame you can see we have potentially a WXY, and therefore I was looking here for an ABC to the downside. And in the C wave, it's always in 5 waves, as I told you. And 1, 2, 3, 4, 5. And this resistance for the internal fourth wave here was at $27. And by breaking the above that level, we invalidate the 1, 2, 3, fourth wave here, and therefore we don't have to expect, or the probabilities shift towards the idea that we found a bottom here. And we came up here, we already knew it, in a three-wave structure. I'm labeling this one here as an A wave now because, yeah, it fits better to the overall idea that we are in a diagonal structure. As you can see here, when I zoom out on the weekly chart, the subwaves are in three waves, A, B, C in a wave 1, and then we saw an A, B, C in a third wave, potential third wave. And now, to keep this idea alive, we should hold above the $15 level. We made it, got a reaction. And now we're labeling this one here as a three-wave structure as well, A, B, C, in a potential larger A wave, and therefore we're looking for a B wave down, and then the huge C wave to the upside into the larger fifth wave. But that's a long way to go, and when we zoom in, the important level was here at the $27. As I told you, the potential fourth wave got invalidated, and therefore we're focusing now on blue. And I'm counting this one here in the blue C wave currently as a 1, 2, 3, 4, 5. And yeah, it was really important that we broke the $27 because now the blue count is leading. And this count is leading, or this idea will keep alive as long as we hold this level here. So therefore, if we hold the $24.71, I'm looking here for trend continuation into the fifth wave of C. And the ideal target here for the C wave is at $37.59. And yeah, that's my preferred scenario. That's the bullish outcome from the low here, A, B, C, in a potential larger A wave. And then we will look, as I showed you on the larger time frame, for a B wave with a bigger C wave afterwards. But yeah, my more bearish alternative is here currently that we already found a top in a larger wave 1. That would mean that we currently saw an A, B, C to the downside in a larger A wave, and that we are potentially in a larger B wave, A, B, C. And as you can see here, the C wave target is pretty much in line with the 61.8% Fibonacci resistance at $38.54. So I will keep that as a alternative scenario, so that this one was a larger A wave and this move here is a larger B wave, and that means we see, yeah, a larger C wave to the downside, and this could bring us, yeah, below the, or into the $10 region, but it's currently not preferred as long, yeah, we hold in the first step, so in the short term, the white support level here, and then we have to observe the structure from, yeah, level by level. So if we reach this area here, we have to check the price structure. So if we see an impulsive move to the downside and a five-way structure to the downside, yeah, we have to stay cautious. But if it's like on PTEN in a three-way structure, yeah, I'm looking here for trend continuation, definitely to the upside. I mean, Hims and Hers has ups and downs from a fundamental news, and therefore I'm still expecting yeah, high volatility, let's keep it like that. And therefore I'm always stay cautious on this chart. I'm still invested and I'm with you. So I know we had some a lot of volatility the last month. And but anyway, my preferred scenario is here currently the blue count in A, B, C to the upside. And yeah, in the short term, we will check here this white support box. And if we hold it, the trend will be up. And then we have to take this level here. And from there on, we will check how the structure will continue. But my preferred scenario is definitely here, the larger A wave, and then we would look for a B wave, and then the C wave to the upside. No financial advice. How would I trade it if I'm not invested currently? Yeah, I think it's a better idea to wait how the structure will unfold. Therefore, I would wait here for the B wave to the downside. I would not buy this B wave. So ideally, trading the C wave to the upside makes more sense, especially when you're waiting here for the first upside reaction. After we find a B wave bottom, and how to identify that is, we're waiting here for a first 5-wave structure. That would mean we see the first wave 1, and then we would look for 3 waves down, scale into the second wave, and trading the third wave to the upside. Just an idea, no financial advice, but this is how you trade it. So currently, no rush to buy in here. And then we jump to the uranium sector. We have talked about energy fuels last week, and I told you the move here from the low was just in 3 waves. That keeps the door open for trend continuation to the downside. As you can see here, 3-wave structure in a potential A wave. And then we saw a potential triangle A, B, C, D, E in a B wave. And we only see, and this is why I don't count it as a 1-2 setup. Because if we assume this one here was a 3-wave structure, then it keeps the door open that it's just, in the first step, an A wave. And then we saw a potential triangle structure, and triangles only unfold in B waves or in a wave 4. Therefore, this cannot be a wave 2. So, and if we don't see a 1-2 setup to the from a low, we can expect lower prices. And I told you the ideal target for this C wave here is at $21.92. We put that on the chart last week together, I think. And the price got rejected here last Friday. And now the price tried to come over this level again, couldn't make it. And in my opinion, that's still my preferred scenario. It's an ABC here, and in a larger A wave, you saw a B wave top here. And now, if we now see an impulse to the downside in a 5-wave structure, 1, 2, 3, 4, 5, then we have first evidence that we're coming down in the C wave. If we then see a corrective move to the upside in a 3-wave structure, then we have a 1-2 setup to the downside. And that, then the probabilities are really high that we're coming down into this larger C wave. Anyway, in a still bullish trend. Why? I mean, you know the structure if you follow my videos here. So I'm still counting here either a WXY in a larger 4th wave, here this blue 4th wave. This could have found a bottom. I mean, in a larger 5th wave here to the upside, I'm looking here for an ABC structure, but that's less likely, as I told you last week, because we saw here this corrective move that doesn't look like a 1-2 setup as I explained it here. And therefore, the blue count is definitely leading at the moment. And either we will find a bottom here in the wave 4, as long as this level holds, key support for wave 4. If we break this level, we have evidence that we are in the wave 2 here. The wave 2 would require that we chopped in 5 waves here, and that fits pretty well currently. 1, 2, 3, 4, and we slightly broke above the wave 3 high here and got the 5th wave here to the upside in a larger wave 1. And then we saw an A, B, C to the downside in a larger A wave. And currently we see the B wave and come down afterwards in a C wave. And that could be the wave 2. And this idea, I mean, fits pretty well into this support box here. I put that on the chart and went to the low of the start of wave 1, go here to the high of the 5th wave. And as you can see here, ideal target for this A, B, C to the downside is at $12.43. For the idea for the 4th wave, the Y wave target is at $12.11. And the support box for the potential wave 2, where the support starts for the potential wave 2 is at $12.21. So we have 3 levels which are overlapping here. And yeah, therefore, if we come down from this level, and I would really love to see that, so something like that, the C wave here to the downside, I would look here for a reaction. And therefore, we would look here for the first reaction in a wave 1, and then we would trade the wave 2 and put the stop loss here right below the start. And then we have awesome reward to risk ratio. In the short term, yeah, I'm observing here the structure, but it looks more and more like the blue B wave top. So for everyone who entered here has probably his stops here, here, here. So that means if we break here down, yeah, the probabilities are really high. We see the C wave to the downside. If we break here above, I mean, the next level to watch is the $22.59 and then the $24. I mean, at every point here in the resistance, we can expect a rejection to the downside in the blue C wave. And yeah, in my opinion, the preferred scenario is definitely in blue. Alternative scenario, yeah, is the C wave here, but just in a diagonal that would look like this. A, B, 1, 2, then A, B, C, 3, A, B, C, 4. So the subwave would unfold in 3 waves as well. And but it's not a setup for me, so I would love to see here the C wave to the downside, and then we would take the chance here down below. And therefore, yeah, we have to wait for the next sessions, and let's see. So next chart is the uranium energy. And yeah, I had that here already for my community. Same procedure pretty much. Looks a little bit different, but here you can see it's a little bit clearer on the bigger time frame that we potentially found a 5-way structure top. And 1, 2, 3, 4, and here we broke clearly above the 3rd wave. So the potential is there that we found the 5th wave top in a larger wave 1. I mean, I'm now leaning more towards the idea that I was on the side that this is still the 4th wave here in a WXY. But as you can see how short the wave 2 was and how long the wave 4 correction is. And usually the wave 4 has the same length as the wave 2 time-wise. And now it's getting really extended. And therefore, because we broke above the 3rd wave top, we potentially saw a 5th wave here to the upside. And that would fit pretty well in an ABC to the downside and a larger A wave. And that we are now see the B wave here and see the C wave afterwards. Because when you see here the C wave target at $8.72. So we take the length of the let's do it together. A little bit education here. So A wave down, we take the length, then so we take here the Fibonacci extension tool, then we go to the we take the length of the wave A, go to the potential top of B, and then we have the target for the C wave. And in this case, we have a target at $8.72. And that would break the wave 4 support at $9.44. And therefore, we have evidence that if we break this level here at $9.44, I mean, it's a long way to go. But anyway, if we break this level, we have evidence that we are in the larger wave 2 here. And the wave 2 support is here currently at between $10.79 and $5.55. In this region, I'm looking for reactions. And same procedure as on energy fuels. If this is a A wave, a B wave, a C wave, there are two ways to buy in. Either you buy into the fifth wave of the C wave, but that's like catching a fallen knife. I prefer to wait for the first reaction, and that's actually ideal to trade the 1-2 setups. So first 5-wave structure to the upside in a wave 1. Then you have a clear invalidation below the wave before this at the start of wave 1. Then you scale into the corrective move afterwards in the wave 2. Stop loss below the start. And then you have only this risk here, and you can trade the strong third wave to the upside. Third waves are always the strongest, as you can see here, 1, 2, 3. And then the fourth wave is optional with the fifth wave to the upside. So that's ideal, waiting for first reaction in a 1-2 setup, buying into the wave 2, and then the strong third wave to the upside. And so let's wait. Next sessions will show if we grind higher here. But it looks more and more like a B wave. I mean, this could still be a 1, 2, 3, 4, 5. And now we come down in a wave 2 in a diagonal structure. But as you hear it, diagonal structures are overlapping price action, and therefore you cannot trust it. We can easily break down here, and therefore I'm waiting here for more data, more clarity, and ideally we come down to this level, and from there on, we can trade it. Or waiting for the next upside reaction and can trade the 1-2 setup. Currently, there is also no rush to buy in. On CrowdStrike, when we jump on to CrowdStrike, as you can see, last week we have talked about, I think we were down below here, and I've already removed the potential it was this 5-wave structure here, 1, 2, 3, 4, 5, and I was looking for the, I will bring it back here to this point. We were here. And I was looking here for a potential pullback in an A, B, C into this white support box, and that would be a great buy-in opportunity. And as always, 1-2 setup, stop loss below this level or this level, because we have a larger 1-2 setup here in an A, B, C, wave 2 here, then again 1-2, and then we can put the stop loss below this smaller degree wave 1 or the bigger wave 1 here. So, and then would trade the third wave here to the upside. And I told you already that it's possible that the price doesn't give us another pullback here and will continue its rally here to the potential target of the third wave at least $529. And and currently we don't see any pullbacks here. I mean, I didn't buy in here. I would love to see a pullback, but the price is rallying and I don't buy in into green candles. I would love to see a pullback here, but at some point the third wave is just playing out, or at least the C wave here. So I'm expecting here higher prices. If we get into this, let me measure it. So if we see now a pullback here, yeah, I mean, no financial advice always. If we see a first breaking below the 437, that would be our first signal that we're coming down in the wave 2 into the white support box here. And if the structure is corrected, so in 3 waves, yeah, I mean, that could be a nice entry region here. Stop loss here below the start or the start of the larger wave 1, depending on your risk management. But yeah, no financial advice. If we get the pullback, could be a great opportunity to buy in because CrowdStrike has great fundamentals, and also here from a technical point of view, really great setup in a multi 1-2 setup when we zoom out. So we have a larger wave 1, then again wave 1, 1, 2, A, B, overshooting B wave, C wave to the downside, and now we see another 1-2 setup, double 1-2 setups. And if they are all playing out, we have really, I mean, no hopium, but if it's breaking out, I mean, the $1,000 can easily get reached. Yeah, what else to say here? I mean, there's still the potential. That's always possible because we saw the C waves with the overshooting B wave here. 1, 2, 3, 4, 5 in the C wave. That we have in the more bearish alternative, a 1-2 setup to the downside. So I have to leave it on the chart as long we trading below the start of the wave 1 here at 567. It's currently not preferred. As you can see, we have 5-wave structures to the upside. So this 1-2 setups. So the probabilities are pretty high that we are playing out this third waves here. But if we get rejected at that point here right now, so that would require we're breaking here below the start of the wave 1, then we have the potential there that we are coming down in the third wave. And this is the reason why you put your stop losses here at the start, so you can protect your positions. Because if we see here a third wave to the downside, yeah, then the price can easily go to, we can measure that. So we take here the length of the wave 1, go to the top of the potential wave 2 at currently 459. So that means we will get a drawdown from this level right now. And then we have a target for the third wave to the downside. So just mathematically, at 228. And yeah, that's a 50% drawdown from the current point. And yeah, I mean, therefore, yeah, I will keep that on the chart just to be aware about it. And my preferred scenario is here that we now see the third wave to the upside. I have here the volume profiles on it, and this shows you, yeah, at which specific point you had the highest interest or traded volume. I think I like that more than the volume here. This just show you that in this candle, in this region, was high volume, and on the volume profile, which is targeting specific price actions, yeah, it's more accurate. And yeah, if we see a pullback from here, but as you can see, it's grinding higher. Yeah, anyway, if we come back here, I think the $400 level would be pretty interesting. But yeah, as you can see, the price is already grinding higher. We just started here the US sessions 2 minutes ago. And yeah, let's see how the price will unfold in the next sessions. And now let's jump on to SanDisk. SanDisk, yeah. Yeah, on SanDisk, as you can see, I communicated my entry in my community at 555 on the 9th of March. And now the potential fifth wave here with the target at 1,232 is playing out pretty nice. And as I told you, the fundamentals are speaking for SanDisk. It's a semiconductor company, and it's highly benefiting from the AI boom because of the storage shortages. And SanDisk producing the SSDs and the storage solutions for the AI sector. And but anyway, these are the fundamentals. You can check out my first video for SanDisk, and I have pointed that out there. And let's jump in here on the Elliott waves. We have a potential 1-2 setup here from the lows. And currently, I have labeled the current move here in a 3-wave structure in an A wave. And as you can see, it's really overlapping. Therefore, it's speaking for a B wave. A, B, and now we see potentially the C wave down. And I think I'm still here on the... Yes, we can still put here the lower degree wave 4 in, because we, as you can see here, and this is why I'm labeling it as a multi 1-2 setup. There's an internal 1, 2, 3, 4. And as long the 865 is holding, I'm looking here for a fifth wave to the upside. And if this is an ABC structure, then we potentially will break this structure. But that would mean, as you can see, the target for the C wave is at 840. So below the 50% retracement of the wave 4 support. That's, if we break that, I would look for the lower degree or higher degree wave 4, and the next level would be the next third wave, the circle fourth, the circle white wave 4. And the 50% retracement is here at 825. So that's pretty much in line with the idea that we see currently a C wave to the downside with an ideal target at 840. And as long as we're holding this level, I'm looking here for trend continuation into the fifth wave to the upside. I'm still holding my backs. I bought in right down below here at 555. And my stop loss is currently at 749. It's not financial advice. That's just my crazy idea here. And why I have the stop loss here at 749, I will keep the price enough room to retrace here into the support box, because on the highest degree here, the first or the initial 1-2 setup here, 1, 2, 3 to the upside could have found a top here, but that would require that we are breaking the 825. And below that level, we have the larger wave 3 here. And the key support here is the 752. If we're breaking below that level, we have evidence the structure is shifting towards a more bearish alternative. But as long as we're trading here above the yellow support box, I'm looking for trend continuation to the upside. And therefore, as I told you, as long as we're holding this 1-2 setup here, or first 1-2 setup is here at the 866, I'm looking for direct trend continuation. If we're breaking this level coming down to the ideal target, then I would look here for the 825. And then we have the quantum computing. I mean, I don't jump onto the whole sector here. They have pretty much all the stocks have the same structure, pretty much. But I take the quantum computing stock here, and I made already a count on it. And I'm counting this one here as a wave 1, 2, potential third wave, fourth wave, fifth wave. And as long the white support box is holding, I'm looking here for the fifth wave to the upside. So let's keep it short and simple. As long as the support box is holding, I'm looking for direct trend continuation into the fifth wave. If we get this fifth wave here, I mean, we already could have found a bottom. Let's measure it. Minimum target, or I want the price to at least pull back to the 23%. This is the 38. So I will put the 23.6% on it. And we already reached it. Therefore, we have reached the minimum requirements for a fourth wave. So the potential is here that we already found the bottom. I mean, the chart is currently looking pretty bullish, but we came up from a pretty long downtrend. So we have enough upside left to trade it. But I want to see, and this is something I'm trying to explain always. In Elliott waves, we're waiting for 1, 2, 3, 4, 5 waves up. Then we have a first impulse to the upside. And then we would look for 3 waves down in a corrective fashion. And then we have a potential wave 2 where we could scale in. Because then we have a clear invalidation point, and that's the start here. So therefore, we would have just this risk here. And then we could trade the strongest wave and Elliott waves, and that's the third wave to the upside. So this gives us the best reward to risk ratio. Anyway, current structure is telling us as long we hold the white support box, the trend is up. And if we get the fifth wave here to the upside, we have the first wave 1. And then I would put the support box onto the chart for the potential wave 2. And if we get an A, B, C structure to the downside, I would look here for entries. At the current point, we have to wait what the chart will tell us. Currently, the chart is telling us the trend, we potentially get the fifth wave to the upside, so it's looking pretty good. I mean, in a diagonal structure, we could, as you can see here from the lows, it's an overlapping price action here. I could count this here as an A, B, C to the upside still. But yeah, I mean, I will wait how the price structure will unfold here, but it looks pretty bullish right now. I think it was because of some fundamental news we got this move here. I think in the video was, I don't know, highlighting anything in terms of quantum computing. But also here from a technical point of view, we were expecting some kind of a reaction here because we are in a larger 1-2 setup. So when we zoom out, it's pretty interesting that we already expected it in a larger wave 1, and that we saw another ABC here to the downside, and we got another 1-5 wave structure here to the upside. And as you can see, the support level here, that was key support for the wave 2. So therefore, we were expecting a reaction here at the $6.42. And as I always say, buying into the C wave, it's possible, especially here on the support levels. You can do that. In this case, you could get already some nice rewards. But I like to trade it with the 1-2 setups here, because then you have a clear invalidation. 1, 2, 3, 4, 5. 1, A, B, C down, and the invalidation is here. So if you have a clear invalidation, then you can scale in, put your stop loss below the invalidation point. And if you don't get stopped out, you make profits. And if you buy into the C wave, you don't know where the end is. So if you buy in here, you don't know where's the bottom. Where's the bottom? Here, here, here. And then if we're breaking down more, you buy in more. So scaling into a C wave is more risky, and therefore I like to trade the 1-2 setups, and that's ideal in Elliott wave trading. So that was a little bit educational content here. But for the quantum computing stock here, I'm waiting here for more upside in a 4-5 pattern, and then we have a potential wave 1, and would look for the corrective move afterwards. Anyway, so next is the Bitcoin chart. Yeah, Bitcoin, I think I have updated that on Instagram as well. So check that out. But we had the critical resistance at 76,400, I think, with the potential fourth wave, or it was the critical resistance for a potential fourth wave here. So therefore, we had the potential for a fifth wave down, and we broke above that. And yeah, that gave us the signal that we are potentially in this larger A, B, C to the upside, with the target at 82,377. And yeah, because we saw just 3 waves here, it's just potentially just an A wave, then 3 waves down again, B wave, 1, 2, 3, 4, 5, potentially in a C wave. And this could be a larger B wave, as you can already see here. And after B wave, we expect the C wave to the downside again. So therefore, in the short term, we can expect higher prices into resistance here at maybe, next level to watch is the 82,377, then the 87,104. I mean, all the red boxes here, the potential B wave resistance. And as long we're trading, and I told you that weeks or months ago, if we see here an upside movement, you probably will read it in the newspapers. If we break above these levels, then everybody's yelling, okay, we're grinding to new all-time highs. Yeah, but from an Elliott point of view, we know this is just a corrective move here currently to the upside. And we're expecting here a B wave and therefore a C wave. And that means a lot of people are currently FOMO buying in and getting, caught off here. And then it goes down afterwards in the summertime. And it's pretty much in line with the idea, sell in May and go away. We are now in April. Maybe we see it. Maybe we grind higher, but I can tell you this move here is clearly corrective, and therefore I'm expecting a C wave or B wave top now or later on. So no rush to buy in. Don't get caught here. I mean, it's always possible we grind here really to new all-time highs. Sure, in a diagonal, 1, 2, A, B, C, third wave, A, B, C, fourth wave, and then higher. That's possible, definitely, but currently not preferred. Check out my last video. I explained you the 200 weekly moving average, and we didn't even touch it, and therefore I would like to see the break of the 200 weekly moving average to buy into Bitcoin, and that's currently below the $60,000 level. So below this low here, ideally we reach here our wick. I have already explained that here in the last video at 49,000. That would be, as always, no financial advice, but that is a way better entry point than buying into structures like this. This is Anyway, so no rush. And next level to watch 82,377. Above that level, the 87,000. And in the mid to long term, we're expecting lower prices. In the short term, we can expect higher prices. So, and then let's check Solana. Yeah, the Solana chart looks a little bit weaker. As you can see, we couldn't make it above the wave A high. That's different to the Bitcoin chart. Bitcoin is a little bit more bullish in the short term. But in our initial idea here is still alive. We potentially saw an A, B, C here to the upside. And I mean, as long we're trading below the $100.51, I'm looking here for a 4-5 pattern to the downside. And this opens the door for a third wave to the downside. And therefore, we're looking here for another 4-5 pattern to the downside. So Solana, overall is looking way much weaker currently. If we make it above this A wave high or above the $100.51, then we would invalidate the wave 4 here, and I would label it as on Bitcoin as a B wave bounce here. Yeah, it would be better in the short term to make the direct downtrend less likely in this third wave 4-5 pattern. And yeah, I mean, as you can see, ABC, A wave, B wave potentially, and now we slowly grinding in a diagonal, potentially in the C wave. Find a top in the fourth wave, get the fifth wave down. I mean, it fits pretty well, and that's my preferred scenario as long we hold below this level. If we grind above that level, next level to watch would be the ideal target for this potential C wave in white at $110.86. And then I would label it as a B wave and would look for lower prices later on. And that would fit pretty well into the Bitcoin count as well. Therefore, yeah, in the short term, I mean, a little bit higher prices, but this could already be the A, B, C to the downside in the fifth wave, because we had in the third wave here, we had an ABC to the downside, as you can see here. Therefore, we're expecting in the fifth wave an ABC as well. And as you can see, this is an overlapping price action here already. It's not a clear five-way structure, but it's an overlapping price action to the downside. I could label this one here as an A wave, A, B. Yeah, and as long we don't made it above that level, I'm looking here for the C wave down into the fifth wave, and that would fulfill then the third wave here to the downside. But anyway, the key resistance is here the $100.51. That would take out the downside pressure in a direct fashion. So all eyes on the $100.51 to put the more bearish alternative out of the chart. But it keeps the door open here for a B wave, and therefore we looking for lower prices anyway. Yeah, I hope that helps here. It was a pretty long one. I hope it was not too long, but I always try to make it short and simple and try to educate you. And if you like it, then please like and subscribe. And yeah, see you next time. Bye-bye.